The ninth best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB, it's the old Silicon Valley Bank, recently bought one of our favorite research firms, Moffett-Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing two-thirds of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we saw in Warner Bros. Discovery or Tesla. That's important because today was one of the worst days since the year began. After these stocks were big participants in the decline, I understand that. Many of the bounces this year have come from stocks that were heavily shorted. Many of them were correctly beaten down. It's just that the declines got a little too excessive when nothing really bad happened, at least by the end of last year. But when you look at the top 10 biggest winners for 2023, they're not like that. For the most part, I'd steer clear of the heavily shorted rebound names. And here, I'm not going to climb on board the Carvana bus or the upstart train. The fundamentals, they're just too ugly. The 10 biggest winners of the year so far, though, bottom line, consider me intrigued. But only if we have a couple more down days like today that give you a better buying opportunity, because these stocks have all been overbought. One that I'm sure the bears are going to create when they go on TV tomorrow and tell you it's the end of the world, as they have throughout this entire very good 2023. This morning, we witnessed the second largest bank failure in American history, which naturally created a wave of fear as the day went on. Hence, the Dow ultimately losing 345 points, S&P falling 1.45%, and the Nasdaq tumbling 1.76%. The fear actually makes sense. I listened to some of the smartest people all day, and I concluded that nobody, not even the Fed, knows what happens when the most important bank in Silicon Valley gets seized by the FDIC, as was what happened today.